Hello, everybody. Today we try something new. It's a Facebook Live with Matthias from Financial Imagineer. Hi, Matthias.
Hi, guys. Hi, Matt. Hi, Matthias.
Thanks for joining and thanks for being available for this experiment. I'm gonna close my mobile phone, otherwise I hear myself twice. So maybe we can just chat a bit until the other people have a chance to join our live, and maybe 1 minute. And after that, we can dive into our topic, which is today. Let me correct my camera. Which is today what we think where the markets will move in the next 2 to 3 years. I have thought a bit about it myself. I don't want to be on the wrong position. Usually we are all, you can also just stay in the market, but it's still a nice idea to think about arguments where the markets are going in the next weeks, years. We are currently 0 people, which is improvable, or which can be improved. But let's dive directly into the topic, as people can also watch the replay. So I would say we go just one by one our arguments about this topic, and go through it, and you can tell me your opinion. I will tell you my opinion. And so I'm just asking you, what do you think? Are stocks overvalued?
I think it depends what will happen next. The market is usually running like 6 months ahead. So that means what we see currently at the stock markets is what we expect, or the aggregate of the market participants expect the economy will be 6 months from now. And of course, it has a lot to do with the COVID recovery, with the opening up of economies and so on. And the good news is, if you look at the market and you trust the market and the collaborative kind of finding of this market setup, it looks like we're going to be better off 6 months from now. Therefore, I think it is interesting to see how earning numbers catch up. We are currently seeing a lot of good quarterly earnings all over the world. Numbers are heading higher. Just on the other side, the COVID situation is not resolved yet. So there could be some setbacks, which this is the hard part to like say, how will it continue? But as of now, it looks like it is on track. And therefore, the markets, as per the efficiency theory of markets, should be like fairly valued, right? But then it could be better or worse, depending on how we improve from here. And I believe not everyone is bought in, everything will turn out right. And if out right, there will be more people joining back. And therefore, I think the markets, if this recovery keeps going, actually still have some room to run.
I also think that there's some room to run. Maybe we can just have a look at this, at the index of the, wait a sec, I need to click here. Have a look at this chart of the S&P 500. I think what many people think is a bit strange or spooky is that this total run and this acceleration, this exponential growth in the recent 10 years, which is kind of scary. And there's also crash gurus who always say, look, there must be a correction, there must be a crash. It cannot run up all the way to the sky all the time. And that's why we are talking also about it and see, is there a correction needed, and so on. So that was the initial idea about it, but I also don't think it's too expensive if you, for example, think about the liquidity of the central banks. I think they're printing really a lot of money to support the markets during Corona. Not only in the US, but also in Europe. And the money must flow somewhere, and not everybody wants to buy gold, or I don't know. So it must be placed somewhere, and if you cannot use a savings account, which is since a couple of years already not working, you have to put your money somewhere, and that's why I think the valuation is still okay. You have also seen that in the earnings, that if there was a good earning, it's the chart or the stock wasn't going up immediately. For example, Microsoft has published some really good numbers, or it has not been growing. So, but if there have been not so good numbers or corrections, then the stock went down. So I think we will not go up immediately, but it will take some time, from my perspective, a couple of months maybe to go up. What's your take on the central bank thingy and the liquidity?
Correct. Yeah. I mean, for the central bank and so on, I have a very interesting chart that I would like to share here. If you may help us. Yes. Okay. So here you see actually what has happened last time, because I usually like to say history does not repeat, but it rhymes, right? So we can usually go back and see what has happened in the past. And on the left-hand side here, you can see what has happened after the so-called great financial crisis of 2008 and 9. And you see there in the blue line that the actual real GDP was kind of lagging the so-called long-term growth potential, or the long-term growth estimate of the economy. And now what could be happening at the moment is, because this time the kind of joint action of all the central banks and participants was actually so much faster, so much more focused than last time when the crisis hit, and so much more, how to say, like less bureaucratic. So money just kept coming like at a pace like we've never seen before. There have been stimulus payments all around the world. Anything you could imagine. And now some people actually say, okay, because of all of that, the blue line this time around, because the crisis, the crash has happened last year, the blue line might now actually overshoot the yellow line, which is the long-term growth potential. And then maybe a correction could be coming, but somehow further down the road, because actually the money is still on, the tap is still on. And this is actually the interesting thing to see. So where will this head to? How far up can it still go? At the moment, we have seen in the US, there's some talks about increasing taxes and other things, which could be some of the limitations maybe of this estimate, but maybe we come to that at the later stage of today's chat.
Yeah, taxes. Oh my God. But I think also that if you see the numbers of the companies, they really make a decent amount of money. They have great margins. Not all industries, but at least the platform companies like Apple or all technology companies, they have great margins, and also many companies went out of business. So there was an acceleration in the digitalization, that companies that have no proper business model, no digital agenda, they are not efficient, that they have been going out of business. On the other hand, also companies have been upgrading their infrastructure for home office. There have been new network components, or everybody is using Microsoft Teams now in the companies, and so they are much more efficient. They don't have to travel a lot. They also need new security concepts when people work at home. So I think many companies also use these to streamline their operations, and that's why they also earn more. They also maybe could also lay off some of their workforce if needed. So in the most industries, I think it was okayish, but or they could become more efficient. And on the other hand, now then when the markets are open, and today I think there's a tipping point. Today, I think it's a point where people realize, okay, this Corona in Central Europe, basically, or in Europe, is kind of gone, because the vaccination is really growing exponential in Germany, and they now talking about opening the market. And I also booked kind of 4 car rentals today because I want to travel. Anyway, I think there is some there is some efficiency gains now after the crisis, and it will also continue, and that's why the companies earn enough, and that's why it's not a bubble, but it's covered by the operations of the business and the earnings, basically, I would say. Yes, and now we have also, I think, transformation in many industries ahead of us in the next 10 years, and there's also a lot of money to make, and this is also one reason for it. Why it's maybe also so fast, this transformation in the next 10 years, is these economic stimulus packages from the US government and from the from Europe. Don't you think so, Matthias?
Yes, as of efficiency gains, it's very clear, right? So if before you have to be in your office to do your boss can see you, you're supervised, you have all these people around, and now the bosses, after a year plus of COVID, they realize, oh, actually, my employees, they still get the job done even they are not here. So they could be anywhere. And then at the later stage, maybe they say, why this employee has to be in this country? It could be in another country. And why it has to be that? It could be another person. It could be something else. It could be a robot. I think this whole situation is very disruptive in a way. It could be for the good, right? But in the short term, it could be painful, because some situations that have been like they are like for a couple of years before could actually change very fast. And if companies adapt fast, which they have to, because probably they also have issues with earning money at the moment, they have to save costs at some point, right? And it is very easy to save certain costs if you want to, because you can delegate much more. You can do remote work to countries where salaries are much lower than in the usual countries. Like if we talk about Europe or the first world, a lot of things could be delegated out of here eventually. Doesn't mean it will happen. Of course, you still need people to run the top part, right? But it's actually, it could be scary. It could be scary for certain people. And on the other side, there's more opportunity as well, right? So if you want to do something by yourself with the internet, people get much more used to like look up some people that work for and offer their services over the internet, right? So the world becomes more flat. That's maybe the main takeaway here, and more efficient as well.
Yeah. The world is flat. What is this for theory?
The world is flat. There, I'm not a flat earther, no worries. But there's a book, The World is Flat, which means before you had certain places where it's easier, or like people are used to outsource certain things only in a few places, right? And not reaching further away. And now the world is flat. It means why somebody in a higher salary country is actually earning so much more than somebody in a lower paid country for doing exactly the same thing. So these two things eventually, thanks to this Corona crisis, will actually find a new median eventually.
I think this automation is this is also something that people with, for example, artificial intelligence, that people are afraid that the intelligence can take over the jobs, or what else? This automation. There's also this RPA, robotic process automation, that some software can click for you on your computer, which is actually used. But I think maybe that the layoffs, because of that, they are only in a certain part of the workforce. But I also hope that we can reskill the people, I think there are also some initiatives to reskill people for other, to be kind of digital marketer instead of a clerk. And I think the layoffs or the efficiency gains, they are not as high as the workforce that is needed to really to transform in all of these sectors. I think we need a lot of people who can, for example, digitalize the health system, that you can train from home, that you can sync your health statistics with your doctor, that you can visit a doctor in your app, and so there's a lot of stuff to do, I think, in the sector. And you have that in all other industries. You have this stimulus packages, for example, for the new renewable energy, where they have to build solar parks and wind power and even nuclear power. So they have to transform all the energy networks and so on. I think that also takes a lot of people who really work on this transformation. And this is not an easy job because it's transformation. It's not running the company, it's changing the company. And that's why I think it's it takes a lot of people. And that's also in other industries, for example, because of China and the US and Europe, this new Cold War, you need a lot of military spending now in Europe. You have also other industries like the space. Space exploration is also a new thing, or also the genomics, mRNA vaccination. Yeah. And you can also do other things with that technology. I think there's really a lot of potential in several industries, also blockchain, in the financial space, insurance companies. They need to change 360 degrees. They are so old, and they will be kind of disrupted. And there will be new services like that you can get marijuana in Germany, where you also need people to drive this forward, and or this interface between brain and computer. And on the mobile revolution, with all the cars. It's not just cars, it's also sensors, it's 5G that you need new batteries. I think there's a shit ton to do, and somebody has to do it. But at least people have to reskill to do that, and automation is more important. If you just do things that are repetitive, I think you will be kind of replaced in the next years, and really early in the decade that we are in now.
Yeah. So the Chinese have a saying, right? The Chinese have a saying. It's about opportunity and crisis. So if you say about the word crisis is like wei qi in Chinese, and wei is wei xian. It stands for danger, and qi hui is the opportunity word. And so that means that the Chinese word for crisis actually consists of two parts. One is danger, and the other one is opportunity. And I think it's very beautiful. It's like a yin and a yang. And the great thing is, some people, when change happens, they are very good in building walls. And other people, instead of building walls, they build what you just said. They build windmills and make use of the new wind. And so therefore, the point here is, it depends on which side you are. And if you try to hold on to what has been like it was for the last, don't know how long, you will be wiped out. If you go back in history, you see the Industrial Revolution has happened later, like service industry has taken over more the production kind of world. And now you see the next level, which is, it goes more into the virtual world. It goes more into automation. You even mentioned space and genomics. There is a lot of opportunity. Genomics alone, the field is expected to grow 82% annualized over the next 10 years. If you compound that up, it's tremendous. So to think like there is not opportunity is naive as well. And all these efficiency gains and so on will actually help to propel up whatever is there that is being pushed up at the moment. So I think we are going into a very, very exciting age as well. But you should not be the person who builds walls. You should be the one that thinks about, how can I build my windmill to profit from that change, and how can I set up myself up for success?
Yeah, it can be also scary, and it's maybe also easy to say you want to build the windmill, but in practice, for example, if you for example in your 30s and you have been in the university at the beginning of the 2000, you learned complete different things, and other technology stack, other behavior, other mindset. And if you, for example, work now in your job 40 hours, and you have to reskill yourself, and you maybe already know that you have to reskill, or you want to move into another industry, it can be really scary, and it can also take a lot of energy in your daily life. So I think it's sometimes easy to say, and I think you also maybe have to accept for a certain time that you earn less because you're new in another industry, so you're kind of junior. It's like being in the 20s, and then you learn again and again, and then you might also get more money. But would you wait until you kind of are thrown out of a company and learn then, or would you try to learn on the side a new skill that is needed?
I would definitely not be the one to wait. I have seen a statistic that all the kids that start school around this time now, I think 80% of the people that start school at the moment, they will be doing jobs that don't even exist today. So the mindset you have to survive, or even not just survive, but to thrive going forward, is you should learn to learn and be open to actually connect your skill sets. So if you say you have worked in one career for long enough, you don't have to restart your kind of skill set from scratch, from zero. But I think that the interesting part is to see in what area can your current skill set actually add value and combine it, right? To actually make sense of a combination of skills. That's where the value is at. Because the more, some people say before, like the more specialized you are, the higher you can earn. But others say the more generalist you are, the higher you can earn. So there is a trade-off in between. And the generalists are usually the ones who learn to connect the dots. And that's maybe, I think, more the area that is interesting going forward. It's like, if you think of the example, if you have a calculator in your hand, why do you need to learn how to calculate in your head if you can simply use a machine to do it, right? Then it's like a tool. So the calculator becomes a tool, and all these robotics, these machines, everything, it is a tool. And the sweet spot will be, what will you use these tools for? And therefore, the generalist who can maybe connect a few more things, you don't have to go so deep in one area. But if you are an expert in a field, it's not a lost thing. But if you learn more, you can start to connect these things and have these overlaps that are actually the niches for you. Because the lesser people are in these places, your skill set will get.
Yeah, so specialists, they are always called I-shape, that you are really deep in one vertical, and then there's a T-shape people who are having a broad or generalistic view, but also have in one vertical, they have in-depth knowledge. And then there's a new one, it's called E-shape, but I forgot what E is for. So
instead of, if you have an E like that, you turn it like this. It's like the T, but with 3 lines down.
Yes, basically. And I think, I think maybe the E is for, that you also have some entrepreneurial drive, maybe. I don't know. But in the end, what you just said is that people should not go directly in a totally different area, but maybe some area where they can use maybe 70-80% of their knowledge, and only have to learn 20% new. For example, you could go from a repetitive sales work in I don't know, in food, in the food sector, you can go into the finance sector and also do sales there, but maybe with a different tool set, or you can go from sales to marketing, which is also not that totally different. So I would say it's important that you can reuse also some of your existing knowledge and work experience instead of learning from scratch. If you want, if I would want to learn from scratch, I would maybe take a sabbatical or just a mini retirement for a year and learn something, and maybe also work on projects for free to adapt to a new sector. So interesting. What areas or where do you also think is in the next 10 years there is a really a paradigm shift, so called in the industry? Where's opportunity? I think also in food and boring stuff like wood, because the wood price is kind of crazy. And
food,
also
food is something that I looked in. I mean, I'm very interested to see how one of the main areas actually that we have an issue is with growing population. And also you mentioned the spacefaring idea before. I believe it's also more efficient instead of having to raise cows and pigs and then slaughter them to cut the meat out, to have like artificial meat and things like that. Like food technology is something that is super interesting because in China, you have seen that actually China has been the country where the most people has been lifted out of poverty in the shortest time ever in history of humankind. I think about 800 million of people, they were within like 20 years, they moved up into middle class. And when that happened, they all had a huge appetite for more pork and for more beef and for more meat. And for feeding like 800 million people more the same kind of diet that other people are used to already, it needs a tremendous amount of animals, which again feed into like global warming and all these issues. So I think the food technology is super interesting. Like Beyond Meat, Impossible Foods, and so on. They are all working on making meat substitutes.
They have also in China a factory, Beyond Meat in China, where they just focus on pork because the Chinese population really loves pork, and they have they tested currently with some restaurants, some luxury restaurants, where they just serve their pork and see if somebody really wants to eat it. And what do you think about water? What do you think about water? Because I think water is also
for the meat. They also have meat that they grow in the lab. So in Singapore, they have now a restaurant that serves chicken nuggets that are completely lab grown. So that means while Beyond Meat and Impossible, they make the meat with like plants. And they give you like proteins in form of soy and so on. But actually another form is to take stem cells and let them grow into your steak and so on. There's a lot of things going on. And for water, I think that's another thing. If population keeps growing, there's the big question now with the pandemics and so on, how much will the population grow? And water is a very scarce resource. So if you like to invest in water, there's companies like, don't have to look very far. Nestle is one of the top players, number one player of water. So that could be something. We are not here to make stock recommendations, right? But there's companies who actually cover that very well, and they combine the branding, the marketing with water, and there's much more.
Also American Water Works is also a company, and I'm not personally not into water right now, but more into this 5G networks. I think a lot of infrastructure or basics that you can really earn a lot of money, because from the stimulus packages, there's also money flowing into that topic, also railway and so on. So basically, but I think wood is right now the most. Also software for engineering or for the building industry. There's some two software companies that I'm currently watching at that are really making a lot of money creating software for engineers who are building buildings. Anyway, so maybe one last thing is also that we have a lot of new investors that are right now discovering not only the stock market, but also crypto and other asset classes, but of course also the stock market. And they have also money, and I think they're eager to spend it. And with all of these mobile apps, it's also really easy to spend your money on some stocks while you're driving with your bicycle. I think that's also kind of driving the markets in the next 2 to 3 years, that we have just a lot of new investors, or even people who are investing in ETFs. They can do it also with these kind of apps, but also they maybe also just invest in some stocks of their favorite companies because it's so popular. You have in Germany the Trade Republic, but you have also Smart Broker and Robinhood, of course, in the States. So I think that's driving the markets a little bit, but not sure how far. And there's also democratization, or how do you call it? That you have that before these professional tools for investing, they have been only available for people in banks. But now there's a lot of technology, or a lot of software as a service that you can use for 10, 20, 30 euros to calculate your portfolio, to see if you have too risky stocks in, if it's a efficient portfolio, or just to use a stock screener and so on, or sector analysis. There's a lot of software right now that can also help you making the right decisions that has not been available before for at that price point before, I think. Do you also use some software, by the way, to screen your stocks, or to?
I'm an editor at datadriveninvestor.com. So we have a website covering all these gigs, and we developed the software for momentum investing, where we will have actually a momentum investment strategy available for the public, which is very interesting because over 215 years, the track record showed there is a significant outperformance for momentum investing over index investing. And we are working on that at the moment. And it's highly interesting because I feel, like you said, it's a democratization of information, and also on the other side, the tools are getting better. You have more options. You have to do as much homework, but in essence, like you mentioned before, it goes back to very basic fundamentals again. Investing is something human, and if you mentioned the personal income is going up before, I have a very interesting chart to share here. This is actually after the crisis. Maybe if you be so kind to share that. Thank you so much.
Of course.
So you see here the yellow line is the total personal income aggregate available. And you see actually, of course, it's also because of the government support. But you see this huge spike up there. So there's, like you said, there's so much money around at the moment. So it has to go somewhere. It will go into shares. It will go into real estate. I have heard in the US and Canada at the moment, if you want to buy a house, you have to pay like 5 to 10% above asking price to even have a chance. And people buy it without seeing the apartment. I've seen in Singapore, some agents I know, they actually sell apartments to Chinese investors who will, because of COVID, not come to Singapore to look at the apartment, but they sell it with their cell phone and make like a virtual tour. So there's a lot of money floating around. And on the other side, as an economist, I understand it. It's like, if you want to save the economy, the easiest way is to understand that situation is like if you have an engine in a car it needs to be oiled, right? And the oil, the thing that keeps the economy together, that's the money, that's the cash. And if you go into a crisis like COVID, there is suddenly much less cash. That means the engine has no more oil, and therefore it will start to have issues. So at the moment, central banks, they need to push out all this money. They need to stimulate a lot and to keep the grease, the oil in the engine, so to say, right? And then eventually, hopefully towards the end, when everything gets better, they can slowly take that grease out again. That's usually how it should be done. Last time it was done, I think, quite impressively well after the global financial crisis in 2013, 14, 15 with the taper tantrum and so on. The central banks, they slowly took away liquidity, built back positions. Maybe this time it will need even more time for cleaning up. So some people are afraid this is called like the central bank bubble, the next bubble built by the central banks and so on.
I think they can also absorb this liquidity by using taxes, basically.
Yes.
I have also another chart. And basically, only half of the millennials earn more than their parents at the same age. I found. So I think not everybody has a growing income, but also the younger people, they're kind of worse off than their parents. I need to maybe look into how the statistic is made, but it's really interesting. Maybe they don't want to work so much, and that's why they accept to earn less, basically.
I believe this is a super interesting chart. Maybe we keep it for a while. I believe that you have seen now with all the things we just talk about, like machines, algorithms, artificial intelligence, and so on. The factors that contribute economic value are human capital and financial capital. And at the moment, what we see is that actually more of the value creation is shifting from human capital to financial capital. You have more leverage with certain things. So it's a very sad reality. But if you control a very good algorithm or software, you have much more power than with anything that was ever around before, right? So you actually have a tool that takes away the earning power of a broader population eventually. It's easier for people who control these tools. Stupid example, maybe if I have an example for that, like, so some people say, they call it the gig economy. The future of the world will be people work, everyone try to promote themselves, but then eventually you need to have a platform to promote yourself. So speak Facebook, Twitter, Amazon. So some of the platform providers will have to accept you and eventually pay you. And actually, these platforms, they can kick you out if you don't like you, right? But it's very different than working for an employer, right? If you work in your job, you get a salary. If you work on a platform and you need the platform, maybe the platform needs you less than you need the platform. So there's it's not equally distributed, the power. And therefore, the power has shifted in a way. It's more concentrated in some. It sounds very evil, but basically the controlling arm of all these of financial capital has become more powerful than the human capital.
This platform economy, basically, where kind of your work doesn't belong to you, but is monetized by somebody else. That's, I think, a problem. In Europe, we are good to regulate these issues. So I think Apple has to pay a little bit because they have been evil about Spotify. Let's see where it goes. I think there also need the creators, basically. And if there are more platforms than just a few, then there is maybe also some competition between the platforms. I think there will be some regulation, but sure, this gig economy is also it's a chance also for many people to get new clients, to be discovered. But it can also be a lot of pressure when you compete with everybody else in the world. Yeah, that's a pity. Yeah.
New world, yeah. And
yeah, is there anything else what speaks against that we have? That the markets are really ready to grow more in the next 2 to 3 years. I think taxes is an issue, but what should you do as an investor? You still have to invest your money somewhere. So, I mean, we have in the United States, we have this. They want to have this 50% tax for people who have earned more than $1 million, I think. And then in Europe, we have also that. At least in Germany, there's a change. There's a new election in summer, and they also, the Green Party and also the Left Party, they are ready to raise the tax for capital gains, for example, from 25% to your personal tax amount or tax percentage. Yeah, so we have to maybe move somewhere else.
Well, one thing is all this money that has been created or printed, eventually it is government debt, it is treasury bills, it is something that didn't exist before. So in a way, if you look at the new debt, it's usually like borrowing from the future, and you have to pay it back eventually. And how do you pay it back? If you go back in history where this has happened before, the most prominent example is Second World War, where there have been a lot of extra taxes added after the war to pay back the war efforts and so forth. I think in some places there have been forced mortgages on the people. So if you own a house, you get a mortgage slammed on you. If you there were currency reforms, currencies have changed, zeros have been eradicated. Like in Taiwan, they had the old Taiwan dollar, and eventually on one Sunday they announced from Monday on, our currency has 4 zeros left, and the purchasing power was not really maintained. So the people who saved up all their cash, they got screwed big time. And somehow they made these plans usually to punish or take away things equally. And who knows what's going to happen after this one. But like you say before, somebody will have to settle the bill, and there will be new taxes eventually coming on that. Last time I looked at France, when President Hollande was making his campaign, he was telling that if you earn more than 1 million, I will be taxing you 70% income tax. And then you saw people like Gérard Depardieu and some other famous people, they prominently left the country. And the bad thing with that, the very bad thing with that is usually that if you actually leave the country, or these capable, I call it now capable people leave the country, they don't just take away themselves, they usually take away their capital as well, their ideas and their risk-taking spirit, or their companies, right? So it's not just a person or two that leaves, it's usually more than that. And I mean, on Singapore side, we have seen a lot of people coming to Singapore. Dyson, for instance, with his vacuum cleaner, a lot of French people are there. People who, the world is flat. I say it once again. So if certain things are decided, you have almost 200 countries to choose from if you're flexible enough.
Yeah,
it's a challenge for the people who know how to do that, right?
Yeah, it's not everybody. I mean, in the internet, the information is available, I would say, but it's also, you have to grow into this mindset that you really leave the country and need also some money, basically, to do that. It's a pity.
In Switzerland, it works quite well, right? In Switzerland, a community decides the tax level for themselves. So it's quite simple. If one village raises the taxes, there is always some people that move because of it. And eventually, over like periods of 2-3 years, you will see that the tax substrates, the total amount of tax that the village earns that raise the taxes, will actually go even lower than before, whereby the one who lowers the taxes usually gets more people coming there to pay more taxes. So the whole tax game can be very, very interesting. And maybe raising the taxes is something that works for 1 or 2 years. But I like to look at money as something similar to water. It usually finds the way of the least resistance, and there will always be another way around it. Unfortunately,
isn't it like boiling the frogs, that you just slowly add more tax and the people don't really recognize it? But I think some people will. Some people will recognize it.
Boiling the frog is like the value-added taxes or the income taxes usually. So that doesn't scare away the big capital, because they can actually pay themselves the way they want and they can consume the way they want. So,
and yeah, as we talked about this retail investors, I think also that I've seen that the margin is the ratio margin to kind of the amount of stocks that are bought is also rising a bit. That could be also a risk that you have, that everybody is over leveraged, because they think like, if you see that chart here again, it's just that they just think it's a generation that has only the markets seen going up, and they kind of take a loan because money is cheap. They get for 1-2%, they can get a loan, and they just invest in options and whatever. So, and I think that can then collapse even faster if they're too over leveraged. But I don't think that it's already too crazy. I think we have to wait 2 to 3 or 3 years maybe until that might be the case.
You have seen what has happened a little bit earlier this year when the 10-year treasury start to go to 1.6, 1.7% in the US. The moment the 10-year treasury yield climbed above the SP 500 dividend yield, there has been a shift in the mindset, and the market stagnated its rise for like 2 weeks before it continued. And so there's also opportunity costs in that. And if interest rates go higher, borrowing becomes more expensive. And then the higher it gets, the lesser people will want to do it. Very simple.
Yeah, the lesser people want to do it, but also at the same time, the market valuation is decreasing. The stocks, because if the interest rates rise, the stocks have a lower value. And if you're already leveraged and maybe over leveraged, then you might get your margin call, and you have to pay. Maybe not everybody can pay, and then they have to sell some of their stocks, and that's why the market is going south even more. That could be a risk, but not now. I would say. I would say we covered the topic pretty decently for now. I think let's just talk with the people in the Facebook group and so on afterwards, what they think about it, and continue the conversation tomorrow in the Facebook group and so on. So thank you very much, Matthias. Have a nice evening, and
thank you so much. If you have any questions, leave them in the comments, right? And we will see how to reply there and help. Thanks also for having me. Cheers.
Thanks. Bye-bye.
Bye. Bye-bye.